In this episode, we interview Silas Peters of Trade Thirsty. Silas is great because he is a trader's journeyman. With just under 20 years experience trading the markets, he's made every type of trade that you can think of, from stocks to options to futures and forex and the commodities markets and currency pairs and every sort of market you can think of. And with that, he brings a unique perspective to this interview that I would love to share with you. The most important thing that you can get from this is just his strategy now from trading everything of understanding how to keep it simple. So let's jump into this podcast episode with Silas Peters. Hey, Silas, good to meet you, brother.
Hey, Marcus. Thanks for having me on the show.
Not a problem. I'm excited to jump into this. You ready to jump into 20 questions?
Let's do it.
Great. So first question for you. When did you start trading?
Started trading live around 2004, 2005-ish.
Okay. And so in that process of starting in 2004, 2005, what would you say frustrated you the most about learning to trade?
Well, I probably went through the normal stumbling blocks that most traders experience. I feel like it went fairly smooth, but probably the risk management was frustrating for me. A lot of people that get into trading don't fully understand that risk management is the key to longevity and really the key to trading. And so that led me to some really poor decision making, such as the ye old revenge trading and getting stopped out when I thought I shouldn't, moving my stops and averaging in. Those were some of the, I think you asked me what frustrated me. Well, those are things that I did that led to my frustration. And you know the end of the story, how that usually happens, what the end scenario is.
Absolutely. You lose a lot of money. You're blowing up accounts, your margin calls, all of those things happen. So those are some pretty important things to learn in the beginning. And those are things that a lot of new traders understand. And sometimes it takes months or even years to begin to master. So With that said, what would you say was your process for finally getting consistent as a trader?
I think the key thing and kind of the aha moment, and it's going to sound crazy, but is just to keep things simple. Keep things as simple as possible. Unclutter your charts, meaning, remove a lot of the indicators, the noise that's going on. But that is really about what it is keeping things simple. And I know that sounds like a simple concept, but that was kind of like the game changer. Quit chasing shiny objects, quit worrying about what other traders are doing, the hottest strategy or stock or idea of the day or the week, and really focus on what you're doing and not what everybody else is doing.
Absolutely. And that is a great lesson to have individuals learn. So that was your process for getting consistent. Now let's kind of switch gears a little bit and talk about kind of how you work today. My question for you is, how would you define your trading edge?
Well, it kind of goes back to the last question is really eliminating the noise and keeping things simple, and really then understanding the risk to reward on any trade that you're about to enter. And I know that it sounds just too simple of an answer, but I truly feel like the edge is keeping things as simple as possible. And I don't really know any other better way to say it is kind of get back to the basics. When I found myself going off the reservation, I said, okay, what was I doing that was working? What was making progress? What was growing my accounts? And it was getting back to the basics, keeping things simple, and eliminating noise and distractions.
Sure. And so just to clarify for the audience, you saying keeping things simple, what instruments or what markets do you trade full time?
So I trade all markets. I trade equities, equity options, futures / commodities, and FX. And as far as like my style and tools that I use, my style is more so on swing, intermediate to swing based. I'm not getting married to anything longer term or too long of a term. I've got positions that I'll hold, in various buckets. do a little bit of day trading, but as I operate multiple businesses and I have other interests in things and just life calls. So my ability to focus on the intraday is kind of becoming less and less, although I still do it obviously because I'm sitting here anyway. But really swing trading is kind of the bread and butter across equities and commodities and FX.
Gotcha. Okay. So you say swing trading is the type of trade that you seem to kind of gravitate towards the most. Now, moving into the questions on your trading method, what would you say is your favorite asset class or instrument to trade if you have one, and why?
I would say commodities first thing. That's the first choice. I mean, that's an easy answer. That's where I got started in my trading journey. I was working at the Board of Trade, and I was working for a hedge fund on a global trading desk, and that's all we traded. We were doing serious size in all commodity markets. You've got your 30, 35 major liquid markets that everybody's familiar with, all the major groups. But we were doing a lot of obscure transactions as well for hedge funds, banks, CTAs, other large floor spec traders. So commodities, that's where I was really bitten by the commodity bug because that's what I was trading all day, speaking that lingo. And that carried over when I left Chicago, just trading commodities. And then currency futures is probably the first product I ever traded. But I do a lot of equity options trading, pretty heavy into equity options trading, primarily on the spread side, just credit spreads.
Gotcha. Okay, so there are a number of different instruments, a number of different areas that you trade. So this may be a tougher question for you, but I think you'll be able to hone in on the answer. So for you, do you feel like you have an ideal market environment in which you love to trade? And if so, how do you determine when that environment exists?
And you mean just in general market environment? Yeah.
Mm-hmm.
I guess not essentially, because the things that I utilize, the things that I teach to my students and members, everything that I do and teach, it works for all market environments. You just have to apply it to whatever situation we're in. But as far as your question, do I have an ideal market environment? I just like to see normal ebbs and flows, just normal buying and selling going on. Don't particularly care for large vertical moves because I'm not so much of a momentum trader. I don't like chasing. I prefer more like pullbacks and retest, trading at areas of structure. So, and then obviously, if I'm a credit spread, if I'm trading credit spreads, I'm selling bear calls, selling bull puts. Vertical moves are not very good for that strategy, unless you have it timed just right. So I'm not going to, my style is not going to be one where I'm just chasing new highs or, chasing new lows. Mm-hmm. I will wait for turning points or what I think is a perceived turning point in the market where I'm timing what I feel like is a very high quality, high probability, low risk, low reward situation. And if the market does decide to say, hey, I'm just pausing right now for a second, but I'm going to keep screaming to the downside or I'm going to keep screaming to the upside, I get stopped out and I move on to the next market. That's the beauty, that I'm not looking at one market. I'm looking at hundreds of markets.
Got it. Makes a lot of sense. So you had talked about being able to be in high probability, kind of lower risk situations. When you do find one of those that exist and you're ready to enter into a trade, what is your process or method for calculating your lot or your position size for any individual trade?
Well, I'll typically favor a multi-time frame analysis, starting on the higher time frames, working my way down, whether that's, for swing trades, whether that's a monthly, weekly, daily, and then maybe using a 4 hour to kind of to fine tune that even further. Or if on an intraday basis, maybe I'm doing daily 4 hour, or hour and 10 minute, whatever the case may be. My risk is going to be based off that smaller time frame. But I guess generally speaking, that I'm probably falling in the 1% to 2% range, per position. It will vary depending on if I'm trading the underlying or, an option spread. I mean, the risk is generally the same, so to speak, but it's calculated and done a little bit differently. So I'm not saying so much a fixed lot size, although I try to stay in that realm because I know that on a spread, my risk is capped anyway. And then that's how I'll determine my position size based on the account I'm trading. If that makes any sense.
Sure. Okay. So in your trading methodology, because again, you span a number of different methods, trades, options, so many different ways. But in your methodology, do you trail? And if you do trail in trades, how do you determine when it's time to stay in and kind of capture a bigger move?
Yeah. So I'm not really. So yes, the answer is I do trail, but I favor, and I think this is important for any trader to get to a point to or a level to, which I think the markets are flexible enough that you can do this, is trade in multiple lots. So you can scale in and out. And now with the advent of the micros and the minis and things like that, that gives the traders, the retail traders, more flexibility. Whereas, you're not just going into one S&P contract or one British pound contract. You can trade minis and micros and scale. So how do I trail, or how do I determine, when to get out? I mean, I'm basically targeting areas of structure, just pure price action, plain and simple. But so I will target areas of price structure and swing points where I feel the market could turn, and I'm watching those areas to turn. I'll use some fib retracements and things like that as well. And so that's where I'll take a third off, half, 2/3, and then move my balance up to break even or slightly profitable. But to me, and I'm not saying this is for everybody, but for me, it's very important to bang out some of those wins, take some off the table. It's just good for me psychologically, bank those profits. And then whatever happens to the balance happens to the balance. As long as my risk is now tucked in where I can't lose anything. I'm just not one that is really scared of missing the big moves. I know that I'll miss big moves, but I also know that I'll capture them. But I'm fully comfortable taking a chunk of my position off at a certain level when I'm in profit. And then whatever happens, the market determines.
Got it. Okay. So my last question for you in this category is related to goal setting. So do you have in your trading methodology like a daily, a weekly, a monthly goal, or how do you determine your profit structure, or in terms of how you set your goals in terms of being able to kind of make your different levels?
Yeah. I mean, I don't necessarily have, hard and fast weekly, monthly goals. I mean, I do obviously want to be profitable, but at the end of the day, I want to get in a position where I'm not forcing anything. So I'm doing my thing. I'm trusting my process, and I'm either profitable or I'm not. And I know, though, if I keep doing what I've been doing and continue that, then in the end, I should be at a level where I'm at. But, as far as hard numbers, it will vary across the different accounts that I have because I employ different strategies. But, like benchmarks, I mean, we all want to beat the S&P, right? So as long as I'm doing that with less volatility, I'm happy.
Got it. Makes a lot of sense. And most successful traders that I interview would say something similar. They don't have a daily, a weekly, or a monthly goal because you don't know what the market's going to be able to provide for you. So really, they just kind of focus more on them being able to execute properly in the moment when they're trading, and then let the dice fall how they are in terms of whether or not I'm going to be profitable or not.
Right,
so
right.
Ultimately makes a lot of sense. So let's jump now into trading psychology. So on the psychology side for you, how do you define success as a trader?
Yeah, well, nobody loves to talk psychology. I mean, it's like trading's most hated topic. Everybody wants to talk about the indicator and the buy sell signals and, how much profit did you make? But it's so important. I mean, it really is. It's really the essence of trading and really anything. But how do I define success? I mean, you've got to have discipline. And to me, you've got to remove your emotions. I mean, I think so many people get caught up. I do. We all experience emotions. That's impossible to eliminate, I think. But if you can remove your emotions and trust your process, and I'll say that probably again, down the road, because it's so important, and having discipline, stick to your rules, have a money management plan, and be confident. If you're not able to have confidence in your trade, then you don't need to be trading with real money.
Absolutely. So going through this, discipline is important. Having great psychology is important. We know all of these things to be true. But even when you have all of those things, there are times when just the market doesn't cooperate and you lose more often than you may necessarily be used to or even want to. So in your own trading, how do you handle a losing streak?
Well, I will just simply, I'll close the platform. I'll close the platform because I don't want to look at it for that day at least. That doesn't mean I won't be right back tomorrow. But no, I mean, if I experience a losing streak, I'll just step back for a couple of days, go back, look and consider what I did wrong. Could I have done something differently? I mean, obviously, I could have sold instead of bought. But in all seriousness, it's I'll go back and analyze. Go back to the log and say, okay, what did I do here? Did I get in too early? Did I get in? Did I stay in too long? Those are usually the things that. I mean, we're going to have losing trades. Even if you're following your rules to a T. But of course, it's just human nature to kind of maybe stray away from that slightly because the opportunity looks so good. Usually if it's so good, you need to pinch yourself. But I'll just step away. And I mean, I got to realize at the end of the day, it's just trading. We're still breathing. We're still alive. There's going to be another day. And let's move on and find some new opportunities.
Yeah, it's definitely a positive way to look at it. I mean, we have one of the coolest professions where we can stare at a computer screen, we can click a few buttons and have the unlimited potential to make or lose as much as we choose to, as long as we remain disciplined. So in those moments, though, because we talked a little bit about losing streaks, I kind of want to dig into that a little bit more to ask, how do you deal with, let's say, frustration, self-doubt, and all of the other kind of negative anxiety-related emotions and things that come up inevitably while you're trading? How do you deal with those?
Well, I just I get to get outside. I just go outside, get outside, get some fresh air, do something that I enjoy. I'll go play golf, play with my two girls. That immediately will kind of help get my whatever's going on mentally from a negative perspective. Realize that, again, like I just said, that it's just a trade, or maybe it's a series of trades, and it's part of the game, part of the business. Don't get hung up on it, and so it's important. It's important to step away from the screen. I think I used to sit there and beat my head against the wall and go, try to analyze, go into every little thing about what I could do, what I could have done differently. We talked about revenge trading. Oh, well, I'll get back in. All of the typical mistakes. But as far as just dealing with it, just getting outside, stepping away, clear my head. Reading in the evening. Those are the things that I kind of clear my head with.
Got it. Now, you mentioned revenge trading. We mentioned it at the top and we just mentioned it again. And that's a great point to kind of keep coming back to, because it happens with so many traders, especially up and coming traders and even seasoned traders deal with it on occasion. So what is your process to kind of prevent or deal with opportunities that may arise where you want to revenge trade or you do end up revenge trading?
Yeah, well, thankfully, it's not something I really struggle with anymore.
Mm-hmm.
All I really have to do is think about the last time I wanted to revenge trade. And I know that it 99% of the time did not end well. So thankfully, I can say that that's not really an issue. Now, as we know, if we're entering on certain levels, whatever our trade methodology or processes are, if we enter at certain levels, maybe we are too early, right? Maybe we want one last shakeout before, the bulls are going to push it higher, or vice versa to the sell side. So I don't really view that. If I step back in, I don't have that revenge trading mentality. It's just like, okay, I was early, I was wrong, but all the things, all the stars are lining up, if you will, and I'm willing to get back in, because we're still sitting, whatever the methodology is, I'm just kind of thinking in my own head about what I'm doing, my process, but whatever the case may be, I don't view it like, well, I got stopped out. Damn it. I'm going to go back in with 2 times the size and get my money back today. That's not the thinking. But if I'm following my rules and trying to keep things as objective as I can about it, then I'm okay getting back in, realizing I could lose again, but I don't equate it to revenge trading.
Got it. Got it. Okay. So revenge trading is something that you seem to ultimately been able to get a handle on. My next question for you then is, what is that hardest mistake, or what is that one thing that you still have trouble with that you are still looking to avoid, even with all the experience that you have now?
Probably just patience. That'd be patience for entry as well as exit. There's setups. I'm looking at setups all day long across daily, weekly time frames, and then of course on an intraday basis on the smaller time frames. But sometimes I have trouble being too, waiting for the things to line up. Like if we're, just a few ticks away or points or whatever it is, I'm like, well, I really need to wait for this bar to close, but it looks so good right now, and I might jump in too early. And then the same thing I was on the flip side is with exits. I would say I'm guilty of just taking off too early because I like to take profit. I like to take money out of the market, free up that powder and apply it to another position. And I'll leave some on the table, so that's why if I'm trading multiple lots, then you can eliminate some of that. But I don't like me psychologically, even though I took off a chunk of the position off, a third, half, 2/3 at whatever price or whatever dollar amount that is, that's great. But let's say I have these runners on, it's either going to continue higher to my ultimate target or target 2, target 3, whatever, or it's going to come back and stop me out. I don't even like getting stopped out on that third position, even if it's at break even, So I guess if I answer your questions, just patience. I've got to be patient. Be patient.
Got it. Well, I appreciate your patience with us as we go through these 20 questions. We just got a few more for you. Let's switch gears now and kind of get into our kind of final bit of the steps in the process. So my first question for you in this last bunch is, can you think back to what you would consider to be the best trade you've ever made?
Yeah, I mean, I've got a couple that stick out, and they were back in the early 2000s in the commodity markets. And one was, let's see, I don't know the exact date, but it was a gold trade. And I was in a multi-month gold trade, and I was trading for a couple of my accounts, and I was trading for a couple of family accounts. and I was trading. I was bullish gold, and just trading off the daily chart into day charts actually. And I bought call options. Just bought call options, not like a lot of new traders do. Kind of more of a gambling trade where they buy way out of the money for cheap, hoping that the market goes higher and they cash in. Those are not very high probability. But using my method, my strategy, I was just buying call options, and I bought more call options as the market was confirming my position, and then as the gold was rallying, I would then sell further out of the month, further out strike prices at the same price that I paid for my initial position. So let's say, I was buying the $400 strike price. I think it was around $400 or $500 crazily at that time. Buying like a $400 strike. And as the market was trading higher, I would sell maybe a $450 strike for the same price I paid for the 400, thus creating what I call a free trade. I have a strategy that I use on that, the free option trade strategy. So the gold could have crashed to zero. Gold could have gone to 2,000. It didn't cost me a thing other than commissions. And when we would pull back, because I thought we were kind of in a sustained bull market, I bought more call options at different strikes. And then as we would bounce, I would sell another strike against that. Well, so what happened, as you can imagine, I had all these free gold trades, and gold continued to go higher, and they expired worthless, or not. Let me rephrase. They didn't expire worthless. They expired fully in the money. So I got to keep, I don't know if you trade options or understand options, but so I got to keep the full amount, $400 to $450, $5,000 a contract, and so on. So that was probably my best trade, is that multi-month gold position. I've had a couple years where I've been on really good side of coffee call options. Just owning outright calls on coffee, and coffee's can be a kind of a hairy market. But I was on the right side, and we're limited risk anyway, but those were probably my best trades.
Yeah.
And
they sound like good ones,
4 to 5 year trades. Yeah.
Yeah. Especially when you have this idea, of being able to have free trades, which is great. So on the flip side of that, because we talked about your best trade, let's change it to what would you consider to be the worst trade you've ever made?
Yeah, there's been a few of those too, but
Sure.
Probably back in the commodity markets, shorting soy meal call options during the summer months, which we know how grains can move now. Grains can move in the summer months, and actually one of the best seasonal trades I have in my back pocket is grain trades in the summer. But I was short call options is soy meal. And I don't remember the exact news story. This was in like 2011, 2012, somewhere around there. And Russia or something like that came out with some news about halting exports or imports. I don't even remember what it was. I tried to erase that from my memory. But soy meal just screeched higher against me, obviously. And I like being, hard-headed and just acting like an idiot instead of closing my position and accepting my loss and buying back my calls. The volatility was crazy. The spreads got super wide, and those are markets you just don't want to be in. But they happen. And so I did all of the mistakes that you would think I would probably make. I rolled out. Then I sold puts underneath the market, just trying to grab all this premium to make up the loss that I was incurred on the call option. And ultimately, ironically, Mill settled back down below my original short strike. But you got to take action. You can't just sit there because nobody knows what's going to happen in the end. But that was probably one of my worst trades. I've been fortunate, knock on wood, on some currency trades. You know how currencies can get with world governments in the middle of the night. I've had some colleagues involved in some Swiss franc trades that didn't go very well, but also been on the right side too. So,
got it. I see. Okay, so for these next set of questions here, we're going to use our trading psychology time machine. So, my first question for you, jumping in this time machine, is let's say we're in and we're going all the way back now to 2004, 2005 when you first started trading. Okay. So Silas, with all of the knowledge, all of the wisdom, all of the experience that you have now, what would be the number one piece of advice that you would give to Silas in 2004 as he began his trading journey?
Well, the number one piece of advice, there is no holy grail in trading. So quit chasing it. Quit chasing holy grail. But some sub notes of my point number one, or my number one is just, quit chasing holy grail. Quit jumping. It's great to learn, and I'm still learning. Hopefully, everybody's still learning. You've got to, if you want to stay on your toes here. But in the end, eliminating distractions, not try to focus on a strategy or a set of rules, a methodology, and learn the intricacies of that. The markets are always ebbing and flowing and moving, and probably not going to understand every single thing, every nuance. I don't think it's possible, but becoming familiar with what you're doing, and most importantly, why. If you can come back and say, well, why are you doing this? You can answer that without even blinking. But and I know I've said this is keeping things simple. I think a lot of people, and I'm speaking from my own experience, is like, I'm going down a rabbit hole where I'm learning XYZ strategy from XYZ guru. And now I've got this indicator on my chart that something flashes over here, on my shoulder, and I'm going to take a look. I'm like, well, that looks interesting. They made 300% adding that indicator or widget. Maybe I should add that to my chart too. Before you know it, you can't even see price action. I think a lot of people get caught up in that side of things.
Sure. It's very true. Even in my coaching practice of helping people with their own trading psychology, that's one of the big things that we have to help people to be able to work through. So I definitely understand. So going back into the time machine, we went back to 2004 and 2005. Now let's do some time tripping. Let's go into the future. So let's say, Silas, you and I, we're having this conversation a year in the future. So we've come back together. We convened again. We're doing another one of these podcast episodes. What would you say would have to happen over that next year for you to be happy with the results in your trading?
Well, I mean, I feel like I'm pretty pleased with where I am today. I want to continue just to hone in on what I do each and every day, and do it with consistency. It's so easy to get distracted, even if you have a process and a plan every day. It's very easy to get distracted, but being able to have, be very grounded, and always improving your psychological aspect, and your patience, and and your frustrations and how you deal with the markets. Like I said, I feel like I'm pretty good there, but there's always room for improvement. But overall, at the end of the day, what do we want to see? We want to see growth in our accounts and our portfolios, the success of our students and members. We have a money management service that we're running, an RIA. So I want to continue to see the growth of that. We're running different strategies. And so the outlook for all that seems positive, and hopefully we'll just deal with all the roadblocks that come, between now and then.
I love it. I mean, you seem like a pretty positive guy overall, and I want to thank you for participating in this 20 questions interview for Market Replay Live. So I just got one final question for you. Could you let us know what you got going on? How can we support you? Where can we go to kind of check out your stuff?
Yeah, I appreciate it. First off, I want to say thanks for having me on. I've enjoyed it. I know you're in Chicago land, so hopefully, if I get back up that way, we can meet in person. But
Would love to have it, yeah.
so yeah, I mean, all I got to say, I guess, in conclusion here is the markets aren't going anywhere. They may be in terms of prices, but there's always going to be another trading day, another opportunity. Don't get caught up chasing the next hottest idea, flash in the pan strategy. There's no secrets. There's no secrets out there in the market. Find a style or a mentor that suits your trading style, your knowledge levels, your risk tolerance, just comfort levels. Don't stop learning. Stay focused and disciplined, and trust yourself, and that should ultimately help move the needle. Whether that's from your personal situation or your financial situation, whatever. But my URL is, or my entity is seasonalswingtrader.com. And I do have an ebook, seasonalswingtrader.com/MRL, that we created for this podcast here. And it's just an ebook that goes over one of my bread and butter strategies. It's one of the first pattern setups, price action based, that I started learning, or that I learned initially when I started off my trading journey. And I still use it to this day. And I do that because it works. But that's all I have to say, I guess. But I appreciate you having me on.
Of course, I appreciate you coming on. And for everyone that's watching this podcast, we'll make sure to put the link to the ebook in the show notes. So whether you're watching this on YouTube or Spotify or iTunes or wherever you're watching it, it will be in the show notes, so you'll be able to have access to that. No problem at all. This has been another episode of the Market Replay Live podcast. We appreciate everyone being here. And again, thank you so much, Silas, for agreeing to come on.
Thanks, Marcus. Have a great day.
You too.
All right. Talk soon.